Hey traders, Parker here with a end of the day recap of what's going on in the market with the sector rotation model. If you remember from my last video, there was a lot more gray in this area than it's showing now. Let me bring down that other video. And you can see all these sectors were gray. This is from Friday. And you can see from all this thing, everything was grayed out. So this means that everything was below 30. And even the S&P 500 was below 30 on the relative strength ratio with this 52-week high, 52-week low. And the VIX was at 24. Today it actually got above 30. And gold was negative 27. It really wasn't anything in the positive. Nothing was in the positive. You had energy in the downtrend. Energy crossed below its average, divergence VIX. The VIX was going up, VIX uptrend, VIX, and just an all downtrend on the SPY, downtrend offensive and downtrend offensive and defensive cross down, which means the defensive cross below its average as well. So back to what we're looking at today, you can see where there's been an improvement in certain areas. So right now, I'm going to take this top indicator off, and I wanted to show the fib, so I wanted to go into the S&P 500. And as you can see, I'm not feeling as well. I got this second COVID shot, and I just ask that you bear with me. So this is the 50%, and right now we're still below 50, and we're below 30. But we're at this 23.8 fib. But I'm going to go ahead and take that off. You can see what today's high, the 52-week high, and day low. All these, everything up there, we're actually at 32.26 on the relative strength meter that I created. And we actually had an increase today of 0.58. But I'm going to go ahead and take that upper one off. And what I really wanted to bring your attention to is the retail sector is up. It's up 1.551%. And you have some other greeners as well. The Dow Jones was up today, a minuscule amount, but utilities is down. Healthcare was up slightly. Staples was up slightly. Real estate was down. Energy was one point was down 5%. And what I'm getting at is this: it's just showing you how everything is rotating now. And if we pull up a picture of the actual market rotation or sector rotation model, you can see how everything is moving, how we kind of sort of hit the top of the market or preparing for a downtrend. And I also wanted to bring this attention to the actual sector rotation model. I made some changes to it. I actually added in the bubbles, but I'm going to go in there. I'm going to cut it off. I wanted to show you some of these other features that I added into it. So we're going to hide the other averages, which is communication, bio technologies, and one other sector that I felt like didn't belong to the defense or offense. I'm gonna cut those bubbles off. I'm going to cut off the offensive group, cut off their bubbles, not show their bubbles as well, hide the defensive group, and hide their bubbles as well. And I'm going to hide the major ones, which is like the NASDAQ, the Dow Jones, hide those, and hide those as well. Let's bring it back up. And it looked like I missed some averages. So let's go back through. So I took everything off, and I have the new portions, the input where you can actually shut down the groupings if you want to just show your. This is the other group, like I told you about the communications, biotech, and that's one other one. And the offensive group, if you want to just show the stocks that are in the offensive sector or the stocks that are in the defensive sector, in industry, and you can have those shown as well. So you can look at the different how everything has changed out. You can see even for the monthly average of volume, it's going up to the buy side. And if you look at today, let me go ahead and just bring everything. You have a hammer candle. This is a bearish engulfing candle, and this is a hammer candle. And what we're going to be looking for is actually SPY to actually break above this closing or this high from the previous from today. So this high was at 428.69. One moment. If you have ever read Steve Nielsen's book, Candlestick Charting, he talks about when you see a hammer candle, a candle like this, is basically hammering out a support level. And what you want to wait for is confirmation for things to go back up. If it crosses, if it gets above that, this high from this hammer right here. And also you can see how it stopped completely on my 23.6 field at 422.78. It kind of went down there a little below, but it actually U-turned above. And I drew those fields from the last swing high and the last swing low. So this is the last swing high and this is the last swing low. And that's how I got my fields drawn out. Or you can just use the fields I provided in the upper sector rotation indicator, which are the 52-week high and 52-week low fields. But if you haven't watched my last video, I made some changes to this. You'll see the name, real estate, you'll see the current price, and you'll see the change for the day, and you'll see its difference from the S&P 500. So the other thing I wanted to bring you alert to was these labels right here. You still have a downtrend in energy. You have a divergent SPY, which means SPY is curling up, as you can see right here. The S&P 500 is curling up, which is this red line, which became dark red, just like your MACD would do if it was if the difference was curling up. And then you still have an uptrend in VIX because the VIX is still above its average, but right now it's turning down. And tomorrow you probably won't have that uptrend in VIX. Right now, SPY is still considered a downtrend because it's below its average, which is this big, thick red line right here. And you have a divergence offensive, which means offensive sector is actually going up. And you can see that change right there. Right now, this blue label is covering up the SPY's difference, but you can see it right here in the labels as well. So I'm still rethinking this, but I'm probably going to take it out and just name it just SPY and not worry about showing a difference here and really just showing a difference up here. And here's the S&P 500. It's changed on the day. It was 0.58. Its current price is $428.51. And you have a downtrend offensive, a downtrend defensive. And let's go to today's volume. You can look at this volume candle right here and see this way above average. It's way above the ultra high volume line as well, and that's why this candle is yellow and this one was white and this one's yellow because this the Fed came out and spoke. And I'm not sure if any of you are familiar with the pre-market prep show by Benzinga, and they talked about this, and they just talked about everybody buying a dip, and that's really what has occurred. Anytime price is taking a dip, it's been bought up. But the way they talk about it is still a bearish market. So you can expect these big ups and then these higher, bigger downs. Big ups and then bigger downs. So that's going to be the biggest thing right there. And like I said before, with the indicator, I added in the ability to, those are the labels, to cut off the different groups if you just want to look at the groups. And we can look at the offensive group and see how they're stacking up. As you can see, all the stocks that are in the offensive group is all curling up. So, and this yellow line is not energy. It's most likely it's materials, because materials had a down 0.28 today. So, but all the stocks are in the offensive group are actually curling up. to the upside. Some of them are below 30, but they are actually curling up to cross above 30 with the on the relative strength meter. And you'll get everybody really today or any time period talking about everything is oversold, everything is due for a bounce. And that's what it's showing you. These things are bouncing. You look at the volume, it's actually moving as well. It's still tracking this volume. And the big news on the day was really Tesla. Elon Musk buying Twitter. And I just wanted to show you to the actual days as well. Right now I have it set for the 15-minute. And if you're unfamiliar with my 3-line Momo, a 3-line average Momo, basically I've taken the three different averages, and I basically I'm using their closing price or their Heikin close and applied it. And I'm on the daily time, on this 15-minute time frame, I'm using 4, 16, 32, 4 candles to give you an hour. On the 15 minutes, 16 to give you 4, 32 will give you 8 hours. And that's pretty much how I use this. And you can see how the SPY really rallied here. And here's my line that I drew on the daily SPY right there, that 428.69. So hopefully tomorrow we get a push to the upside, and we can go look at Tesla as well. And how I reacted to the news was Tesla actually just plummeted. It dropped down and rebounded. And if you're unfamiliar with this indicator, it's one of the free ones that I gave. But you have to go to use ThinkScript community to go and get it. But these are my 3 move average Momo, higher time frame, higher 3 time frame indicator, and that's what I was just alluding to. And the previous day high, close, and open. And that's on the other indicators I have on here right now. The other indicators I use are my Darvish box and my PLV. The previous volume profile. I use the previous day's volume profile to get a measure of what's going on. So right now we're actually still moving up in the after hours on Tesla. I have some fibs on here. This right here, this 100% was his last swing high. And you can see how everything really created a range right here. If I would have put on the Darvish box, you would see a range that was created right here. And it broke out right here, but it came right back to the lower part of the range. And hopefully tomorrow it breaks out again and is able to get back above it's 50% retracement. Otherwise, you may see some downside action. When I was listening to Joel on the pre-market prep show, he was talking about Tesla really had to hold the 970 level, which is exactly what this 100% fib is. So, and it did. But this would pretty much be the end of the video. You can see how each one of the sectors performed today from the labels. And I'm almost done putting in the different features for this indicator. I'm kind of under the weather with this second COVID vaccine shot. So, but if you haven't already, please like and subscribe. And you have any questions or anything, please leave it in the comment section. And I really appreciate you guys taking the time out to listen to what I have to say. And if you have any input or anything, please leave it in the comment section on improvements or something you didn't like. But I wish you all the best. And like I said before, the VIX is in divergence with the S&P 500. And you got this SPY divergence, which means the SPY is going up while the VIX is coming down. And hopefully we do get a rally tomorrow. But this is the end of the video. I wish you all the best and happy trading.